So gold, whether it's being managed at this moment or not, is immaterial. It's signaling what it should, and that is economic problems ahead.
These are the end times financially. To me, it's a no-brainer. You want your capital in something that cannot default.
The market will say, we don't trust debt anymore. And at that period, the super juice, the turbo juice, as I say, will actually be focused on gold.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for December 18th through December 25th, 2023, while supplies last. First, we feature one 10th-ounce gold maples at just $30 over melt with a minimum order of 5. Next, we have silver eagles at $4.99 over spot, making this a great time to swap silver bars into silver eagles at the lowest premium in years. Finally, Constitutional 90% silver is just $3 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're very pleased and honored to be able to offer you an all-star panel here at the end of 2023. Today is Friday, December 22nd, 2023. We have Francis Hunt, the market sniper. We have Bill Holter, widely renowned former Wall Street brokerage manager and bullion dealer, and frankly, expert of markets with us. We have David Morgan, known as the Silver Guru, with us as well, and Elijah Johnson and myself, Dunnigan Kaiser, here. Welcome, everyone. Thank you for joining us for this end-of-year 2023 wrap-up and 2024 look-ahead.
Thanks for having me.
Absolute pleasure. Yeah, thank you.
So we'd like to start, if we could, let's start, if we could, with David. We'd like to look back quickly, each of us giving our top takeaways from 2023. It's been quite a tumultuous year. A lot of things have happened. Some of the biggest bank failures in the history of the country, some unprecedented moves in terms of rapidity of interest rate raises by the Federal Reserve, on and on. Lots of things happening both internationally and domestically, economically, financially, etc. Could you maybe give us what maybe might be 1, 2, or 3 key takeaways that you think are noteworthy from 2023 for those who are taking notes at home?
Yeah. So number one is the propaganda press, the economy's strong, no recession, all that BS. I asked, how strong is the economy? UBS expects 50,000 retail stores to be closed by 2026. An insider tally of announcements announced 20 major retailers in 2023 finds as many as 2,847 stores have closed or set to close across the United States. This is almost as high as it was in 2020. We expect the same for 2024. In simple terms, the retail markets have been devastated with everything from restaurants to clothing to big box stores. The physical economy in the United States is contracting, not expanding. The gross domestic product is smaller, not larger. The reason GDP shows an increase is due to all the borrowing of the U.S. government. And that's because for every $4 borrowed, $1 quote unquote product is produced. Anyone with 2 brain cells could clearly see the system is broken. If a truly vibrant economy, for every dollar borrowed, there'd be $1.50's worth of product produced, or at least $1.10, a 10% gain. In other words, borrowing is prudent and adds to the GDP when done in a good economy. In a economy such as ours, borrowing $4 to produce $1 product, we're going the wrong way. I'll leave it there.
If we could move to Francis, you do a lot of forward looking, but if you'd take a moment and look backwards and your key takeaways from 2023.
Seems like for 2023, guys, that the debt situation really came home to roost. The March 2020 events was an ultimate capitulation in yields, which meant a hypervaluation in debt, and everybody who was in the buy bonds wear diamonds brigade, it seems like suddenly that one died. If you were encapsulating 2023, it was a dawning of the realization of a fat pipe of debt getting ever fatter, and further need, as very much as David has said. I concur with almost everything he just said. The economic tax take is dropping at the exact time the spend to maintain existing projects is going up. The inflation is being understated, and the fact about debt, the whole lie of the pivot, and it's becoming topical again, you may get a small cut, you may get a second cut, but long run, if debt is to devalue, you're more likely to face interest rate spikes. As I say, the inverse relationship. And with the proliferation of debt, the only thing is devaluation. And that is the super juice, the turbo juice for hard money. That is gold. So I'll park that point. That's my takeout.
Very well. Bill, could you give us your view of the key things that you think people need to make sure that they don't have missed in 2023 looking back?
I agree with both David and Francis. As you know, I've looked at this all along as a credit event. And I think the credit event, even for the average person now, they can see the math. We went for how many years? 25 years with the debt service of the U.S. Treasury between, call it 350 and 450 billion a year. Now we're at $1 trillion, but in the next year or two, we're going to be at $1.5 trillion, $2 trillion. At the same time, as Francis mentioned, the tax receipts are they're starting to weaken. And if you look at valuations in equities, I mean they're sky high. In my opinion, we're already in recession. We are at some point in time going to have a stock market crash, which will give one big boost in 1 year to tax revenues for people taking capital gains when they're forced to sell. After that, then you're going to see tax revenues dry up drastically because the selling will have been done, and the economy itself is not. It's not generating. It's slowing down. It's not generating the tax revenue that it normally would. So I just think the biggest thing this year was the unmasking of the mathematics, if you will, that go back to what 2002, 2003. Dick Cheney said deficits don't matter. I think the average person is finding out already that in fact they do matter. They've piled up, and now higher interest rates have exposed the mathematical problem.
I would like to tap you guys' views on the following question, because Bill and Francis and David, I think you've all highlighted the key reality of the contracting physical economy at the same time that servicing the debt that's trying to paper over that contraction is increasingly unaffordable. And Bill, one statement you just made about think people are starting to awaken up to that, or at least realize it. I wonder how much it is that people are just waking up to the fact that their pocketbooks are getting hit. That's the first thing that people will notice, is that whether it's food and fuel and medical and education or whatever. Do you think that the realization has really happened for many people, or even a significant portion, that where the real source of this problem is, and that they know then therefore what to do about it to protect themselves or their families? Bill, if you could start, let's go maybe in reverse order. Bill and Francis and David.
Yeah, I think that's absolutely right. That is the original wake-up call when people experience difficulty personally. Once they experience the personal difficulty, then they start looking for the reasons why, and obviously inflation's a big reason. And I think it's a far larger number than you might suspect of people that are definitely feeling the pinch. I'm going to say probably 80-85%. I mean, unless you're in the top 5 or 10% of wage earners, inflation bites. Does it bite the top 5%? Yes, somewhat, but not drastically. So it's really a huge majority is feeling the bite of inflation. And I would add to that, they're also feeling the bite of higher interest rates, because, I mean, look at anybody who owns a home. If they want to move, will they move knowing that whatever loan they get, if they have to get a loan, is going to be much higher. That's the first part of it. Then the second part of it is buyers. I mean, they've had their knees cut off from under them. What an income that would have supported $1 million in borrowings 2 years ago now only supports $600,000. So it's a double whammy. I think people are definitely feeling it, and it is a wake up call. Now, does the average person know what to do about it? Probably not. I mean, what's the ownership of gold and silver in the United States? 1% or less? Even if it's 2%, that's not a real awakening.
Very good. Yeah, I think Rick Rule continues to say that the overall portion of the investments in the U.S. are less than 0.5%. That doesn't mean that there could be 1 or 2% of households, but they don't have much in there. So that's still less than 0.5% of investments overall. Francis or David, any thoughts on that as far as where, if we've talking about the contracting physical economy and the cost of servicing the debt that's being used to prop up basically the weekend at Bernie's, prop up the corpse longer, is becoming more and more unaffordable. How widespread do you think the awareness of the root causes really are among the people?
I think it's hitting their pockets, and there is awareness. I would predict a very grim Christmas for general retail and consumer. On the equity side that I think Bill brought up, it's important to also note inside of that, if you take out the Magnificent Seven, which is now 40% of the S&P 500 by market cap, in fact, you're sitting on a negative S&P right now. And the Magnificent Seven are essentially statists. I call them the Surveillance Finance Brigade, and they are doing exceedingly well out of the data they're harvesting and many other, and the scale. They are essentially oligopolies, and they're included in the stock market. And these are essentially the cuckoo in the nest that eats all the food, and all the other babies are dying. And they are status fed. So that's the one thing on the stock market comment. I think he's absolutely right, Bill, in terms of saying recessions. I also don't think we do ordinary recessions. I would say, most things are pretty depressional. I think the consumer is very badly hit, and they're also understating through the stats, the BLS, the victory over inflation. You've also got to remember these inflation numbers are on being compared 1 year ago to quite high water marks when you're at double-digit inflation. So being a further 2.5% up on a number that a year ago was 11% or 9% is not great progress. It just means you're still gaining speed in inflation. It's just not quite at the same rate of acceleration. The other part of your question is how many people are properly prepared? How many people? I think most people are feeling it and they don't know how to prepare. And there's a lot of anxiety. I'm seeing a lot of people that have financial anxiety, that don't run businesses, aren't in the top 5% that Bill referenced, and they're getting squeezed. And they just think they have to work harder and hustle harder, and it still doesn't come. And it's trying to get blood out of a stone. And that is the fact that we actually have a two-tier economy system. You have the statist economy with the big oligarchs that get a lot of business from government. It's also interesting on employment stats, by the way, and I'm throwing a few wild cards here that are on the state side. But the biggest employers on this number that, yay, we're creating new jobs on the non-farm payrolls is in fact government and the pharmaceutical industrial complex. So you've got to ask, this is exceedingly lopsided, much like the equity-based comparison that I was making. It's very, very narrow slices. It's once you start taking it a level lower that you start to see that some people are feasting and the rest are in famine, and that's the narrative I would give you. And as a final point, to give Dave a chance to come in as well, we've had 7 years of feast, actually, and we didn't put anything away in the biblical sense in the silos. And now we're properly hitting the buffers on the debt. The debt can't be extended. The credit card can't be extended. We run up the bills on the credit cards while we were feasting and there was abundance. Now we have 7 years of famine. We even borrowed, in terms of the states, offshore from other people to get food while we were feasting. Now we're having the famine and the silos are empty, and we owe the food back to the other nations that we borrowed. So there's no way out as far as I can see. And for people, silver and gold has to be a far larger part, as again, Bill was referencing, and I'm sure Dave will say similar, of portfolios than it currently is.
In your perspective, David, on all of that, because it seems like you mentioned, and everyone here has been mentioning, the struggling economy and how it's been impacting the average person. As we head into 2024, how will the average person be readily prepared for what's coming?
Well, there won't be, and I'm just going to kind of answer the last question and comment on 2024 at the end. So yes, everyone that is of above average, upper middle class, whatever that means. What Bill said, Francis said, the 5% are probably okay, but below that. U.S. credit card debt is at a record high, according to the Federal Reserve of New York. It's hit a new high of 1.1 trillion during the third quarter of 2023. That increase is the largest since the Fed started tracking data. The report shows that the rate of delinquency is the highest since 2011. The savings rate is near an all-time low. During the pandemic, savings shot up to 34%. Now it's 1/8 of that. Foreclosures have surged. There were filings of over 95,000 foreclosures in the first quarter of 2023, which is 22% higher than the previous year. There's an estimated 2 million homeowners that are behind on their home loans amid job losses and other hardships brought on by what's going on. And car repossessions are up. We personally, see what's called channel stuffing, which is a slang term, which means that new cars are being put on the dealers' lots more and more and more, and they're just collecting cars. They're not selling cars anywhere. And the people that have got these cheap loans or whatever can't afford the payments, and they're being repossessed. And I do want to talk about energy at the end. So it's 2024. One of the late, great Jim Dines' acronyms was, or not acronyms, but sayings was, a trend in motion continues until it actually stops. Well, there's two major trends here. One, as Francis eloquently outlined, is a change in interest rates, which means that debt at the long end of the curve especially is worth less, which is deflationary, but the payment is more. So as Bill said, if you could afford $1 million house back 3 years ago, now you can afford half this much house for the same payment. So I see 2024 with the trend continuing. And I think you're going to see new records in delinquency, credit card debt, mortgage problems, and car repossessions. I hate to be a bearer of doom, but you asked, and there's an important part about energy I won't speak of right now. We might get to it, but it's highly important. I don't think too many in the financial, newsletter industry have talked about this. So back to you guys.
We're seeing the struggling economy. We're seeing gold making record highs. A few weeks ago, gold going above 2,100, and it's poised to make a new monthly close and a new yearly high close at the end of this year. David, your perspective on the price action we've seen in the metals, and it seems like there's so much more potential from here because, as Bill mentioned, hardly anybody is invested in the metals right now.
Yeah, gold is doing its job as far as I'm concerned. I mean, I wrote the Silver Manifesto. I proved beyond the shadow of a doubt that the markets are manipulated. So, but having said that, I've also said that in the long term, I don't think they can be manipulated. So I hopefully didn't contradict myself. They certainly can manage the price within certain bounds for quite some time. But gold is actually breaking out, as you said, Elijah. And I think this is portending what lies ahead. You got to remember, from my perspective, and maybe the other two, gold is more establishment than we realize. Central banks collect gold. China collects gold. Russia collects gold. The bankers know that gold is the money of last resort. If everything falls apart, they could go back to a gold standard or partial gold standard. Silver doesn't see that luxury. Silver is not a monetary metal as far as the bankers are concerned. So gold, whether it's being managed at this moment or not, is immaterial. It's signaling what it should, and that is economic problems ahead. Remember, gold acts like a barometer, not a thermometer. It's signaling to us now things have gotten so bad that I'm getting into new high territory, and no one, not Bill, not Francis, not me, knows how high is high. So we could see, 2,500 next year, maybe 3,000. We see 2 or 3 black swans hit. You see a money standing bank go down. At the same time, there's a cyber attack on the financial system, along with Europe saying they didn't get enough heat. And you've got a real problem. And all those things are realistic. Again, I know I sound like Mr. Doom, but look, I've studied this my whole life, and I have never been in the position where I am right now, which is I am on edge. I am not feeling happy. I'm not feeling good. And money isn't really a solution. It can be in a short term. It can help, but it's a physical economy that we need to do well for everybody. And that's breaking down. That's the problem.
I wanted to underscore one thing that was mentioned here about channel stuffing. I believe, David, maybe that was your comment. There's an article that came out about 2.5 weeks ago, and that was the U.S. automakers. There's nearly 4,000 auto dealers signing a letter to urge President Biden to tap the brakes on his EV mandates. They say the group recognizes it says the reality is, however, the electric vehicle demand today is not keeping up with the large influx of EVs arriving at our dealerships, prompted by the current regulations. EVs are stacking up on our lots. That's what it looks like when you do channel stuffing. Is retail goods stack up because there really isn't pull through from the market. As we look forward beyond that, the other thing that you guys haven't touched on here is the impact on the banking system. Could we each take a crack at what your read is on the health of the U.S. banking system? Because there certainly was a lot of concern by the end of second quarter, beginning of second quarter, March, where we had the second, third, and fourth largest bank failures ever in the U.S., whether people have reason to believe that their funds are safe on deposit in the banks. I think, Bill, if you could take a crack at that first, and then Francis and David.
Well, I think obviously what happened last March and April, there was a huge run into, and when I say a run, I'm talking from a retail standpoint. There was a huge run of the average person saying, I want my money out of the bank and I want it out today. I mean, you know yourself, you were taking orders, your phone was blowing up, and people wanted to do the deal and they wanted to wire the money the same day. That has morphed into, with the higher interest rates, it's morphed into an electronic bank run, if you will, where money has been leaving banks because the interest rate's not as high as investors could get in money markets, even in treasuries. So there's been an electronic bank run, and I guess the easiest way to answer your question is the banking system is in far worse position today than it was even a year ago, and that's because the banking system has been losing their deposits, and that's that's go-to capital. The problem now is if banks have to scrounge for capital, their loan portfolios, their bond portfolios have devalued because interest rates have gone higher. So they're going to be forced to liquidate things at lower prices. And I do want to reiterate that the higher interest rates causing bond prices to drop, understand that credit bonds are what is now the financial foundation. The foundation is debt. It's no longer real money.
And Francis, if you could tell us a bit about your perspective on this. It seems like it was really a shock to a lot of people that many banks failed in 2023. What do you expect for 2024? And I think, money in the bank is what people think is the safest thing to have. But this year has really, as we've mentioned, shaken people up and maybe given them a different perspective.
I think Bill made a very good point. People need reminding. You can't talk about banking in isolation. In fact, I go back to my original point. It's debt. And it's the absolute huge volume of it, and the future need to issue an ever greater volume of it. And for everyone to understand that debt is essentially an instrument that is how money is created. So to get that deposit in a bank, you have usually a dollar instrument, which is why everyone says you hold the gold bar, you don't have a T-bill liability that comes with it. It's possession. But the debt it will affect both currency markets, because there'll be different rates of failure, or different ones will be weakened by others. So you're going to get volatility in currency markets. You're going to get volatility in all forms of debt instruments. And all of that is intermediated by a banking system. So when you ask about the banking system, it's almost to me like it's downstream from the larger problem in some senses. And the larger problem is unsustainable and is in fact broken. And I think certain banks were allowed to go bust and others are being maintained, that the central banking cartel are maintaining. But in effect, our entire banking system is in a state of bankruptcy. And it's just a case of when you let the wigwam be pulled down on you. And that's a matter of timing rather than an eventuality is guaranteed as far as my perspective is. All the banks are commercial property loans are an absolute problem. If you're in tier 2, tier 3 type commercial property, outlying areas of New York, and this is anywhere in America. People are working from home, no one's traveling, no one's staying in the worst offices, particularly, or average offices nowadays. They only want to go to the very best. There's tons of space. All those loans and all those assets need huge markdowns. There's so many overhyped assets that need huge markdowns, and the debt is the other part of that equation, and it can't be paid. I'm just using commercial debt as an issue, but you can look at housing as well. The property prices are way too high. I'll just point out, as I think I'm the only guy who's not stateside at the moment, in the UK, which is a far smaller island, and they don't make land anymore, and it's always been a one-way bet, the property market, they've just had the biggest contraction in 10 years in property prices. So that's the article you're getting out of Europe, for example. So not only is it this, we're talking America, this is contagion. You have to go right up to the macro point of view of this. We're all lepers in a leper colony. And what goes for states, goes for Europe, goes for Britain, goes for China, probably even more so potentially, goes for Australia, New Zealand, Commonwealth, and all the what's called the advanced first world nation states. So it's global. And it's not just about banks, it's about the entire structure of a money borrowed into existence system. There's too much debt. It's going to affect currencies. So the yen is the other story that kind of rolls a little bit into gold, but is an FX story, if you'll permit me, is the big collapse of the yen. USD 30, they've lost 30%. And we were on that trade and benefiting from that. Why? Because they're all lepers, but that was the sickest leper. They still had yield curve control for a while, and their rates were still a lot lower than America. So once America started moving, the British pension crisis, when they didn't up as much as the Fed rates, they got a wobble. So what you're going to see in 2024, because I think you're also asking me, what's coming ahead, banking system and everything, is if everybody doesn't move in lockstep as the lepers and be equally sick, it's now the killing zone. The weakest are going to be taken out. And that's how you start at the fringes. The walls, the beggars that live outside the city walls die first, but the siege is here. And slowly we collapse inwards. And that could lead to an interest rate spike and a dollar spike, but all as part and parcel of a failing debt and currency system, and with it, the banking system, which was your question.
Yeah, I just wanted to add on the banks. It's my guess. I mean, it's not a guess, but it's obvious that these governments want to introduce central bank digital currencies, and it's my guess that a collapsed banking system that ends up with 5, no more than 10 banks left out of the many thousands that there are would be much easier logistically to begin a central bank digital currency. So a collapsed banking system is probably part of the plan.
Yeah, if we wanted to have any corroboration of that reality, just look at what happened in March of 2020 with the onset of global lockdowns, et cetera. Within about 3-month period of time, mom and pop shops, small businesses were shuttered. They were told, if you can't do social distancing and comply with all these regulations, you need to cease operations. And meanwhile, the big box, stores, the Costco's and the Walmarts were just cranking. They were doing home deliveries. They were doing all kinds of stuff because they were the favored few. We've seen that earlier. One of you guys was talking about the captive or the Magnificent Seven, whatever, being really government fed, government sponsored, Francis, and that just seems to demonstrate once again that same playbook of the favored few are all it takes to basically express top down oligarchy type control over the masses, but won't take participation from the majority of small businesses, which is where all the employment comes from, which is that gets that vicious spiral I think that Bill was talking about, and David. David, any thoughts from you on the banking system as we look ahead?
Couple, one anecdotal and another just some facts for contemplation. Number one, I got a call from my banker yesterday, and young girl, probably been working there a year. She called and said, verify your account number, blah, blah, blah. I did. She said, well, I'm not sure that we can wire this money in. It's your private account. And I said, well, that's interesting. We've been doing it for years. And she said, no, I think it's got to go to the company itself, the LLC. And I said, can you hold the phone? Let's do a three-way call. That's above my pay grade. So I put her on hold. I hit Dale, my friend that formed the LLC. And so the three of us are talking. And she says to him, from now on, these wires have to go to the LLC designation, not to David Morgan's account directly. And he said, that's odd. We were doing it that way for years. So well, I'll let it go through this time. I said that anecdotal because it's personal and most people trust me. I'm a man of my word. And this is something I've seen from my membership where these banks seem to be holding funds. There's a dealer I won't name, it's not Andy, that I know fairly well. He had 3 six-figure wires that the bank held up from him for buying gold and silver. So there's the anecdotal stuff that's going on in the banking system. I think it may be starting to seize up. I don't want to use the word may. Let's get to some facts. There's a financial warfare taking place against a U.S. corporation. The rumor is that the Chinese have been dumping U.S. treasuries to collapse the Fed. The truth is the ransomware attack on the Industrial Commercial Bank of China, ICBD, disrupted some trades in the U.S. Treasury market. And according to the Canadian intelligence source stated, quote, the Fed put out a $24 trillion bond for countries to buy and cover the debt. No one bought even a penny. China bought oil futures from Iran and paid $33 trillion, but not in U.S. dollars. What does that tell you about the USA and world affairs? They are finished, end quote. I think this, again, is the trend in motion continues till it actually stops. The de-dollarization, as Bill said, their plan, and it's a plan, to go to CBDC. I'm not convinced that they're as smart as they think they are, that they'll really be able to implement it. I did a thing with another interview on cash, and I was amazed what I dug out for research before the interview. I forget the exact numbers, so forgive me, people. I'm not lying deliberately. I think it's something like 60% in some of the smaller nations use cash as means of final settlement. It's going to be hard to remove cash out of the world economy. You might get it out of the New Yorkers, and you might get it out of the Dallas folks and, people that are already using nothing but Apple Pay. But when it gets down to the hardcore blue class farmers, et cetera, it's going to be hard to remove it. So that's where I stand right now. I'm, again, more upset, I think, than I've been in all these years because I just see this synergistic effect of all these things coming together at once. Everything Francis has outlined, everything Bill has outlined, what I'm revivifying, it's all there. It's not one thing anymore. Yeah, you could say it's the debt, and Francis is right, but what money runs everything. The power of money is losing its power, and the power brokers of the money system think they got it made. I don't think so. Anyway, back to you guys.
And we have a few viewers' questions here. One mentions the need, to have cash reserves, because if we do see a system failure, I think it's important, obviously, to have precious metals, but also to have cash on hand as well. Scott asks about this and also precious metals, and I thought we could turn to Bill first with this question. Given the volatility of the bond market and knowing the real estate market is in a bubble with the stock market, if someone has an adequate amount of emergency funds of cash and has no debt, why do many experts say not to have all your assets in gold and silver, which is real money and carries no counterparty risk?
Well, I guess I would first start off by saying because they're wrong. And I say they're wrong. Gold and silver used to be cash, and the place to be when there was going to be a bear market, a market downturn, was cash, and that was gold and silver. The idea today, if you put your money in cash, it's got to be in a bank, it's got to be in a brokerage account, it's got to be in a money market. You have counterparty risk, and the paper itself, you're going to see massive defaults, but you're also going to see defaults of the systemic players. I mean, I don't know whether you have read or agree with the great taking. I think it's pretty spot on. And I think they're going to tank banks, brokers, insurance companies, even exchanges. That's the plan. And people are going to end up with nothing. My suggestion, and I've said this for 4 or 5 years now, when people ask me how much should I put into gold and silver, my standard answer now is whatever you don't want to lose. And the reason I say that is because gold and silver cannot bankrupt, and everything else in the system, including the Federal Reserve, the U.S. Treasury, all central banks across the globe, any and all can default, whether it be by non-payment or just massive overprinting of the currency to debase it, 50%, 75%, 90%, whatever. So I think anyone who says that you should not have all your eggs in one basket, 99% of the time that's true. These are the end times financially. And if you heed the words of Richard Russell always said, in a severe bear market or in a depression, the one who loses the least is the winner. I mean, to me, it's a no-brainer. You want your capital in something that cannot default and also cannot be taken away from you. So I think gold and silver is what you should consider your cash. As far as cash, I've told people they should keep maybe 5,000, 10,000 on hand, and when the shit hits the fan, go out and spend it as fast as you can. It'll go to a premium for a couple weeks, maybe 4 weeks. But at some point in time, people are going to figure out, hey, I'm not going to give something real for a piece of paper that's monopoly money.
Now, Francis, I know that you've talked about a reset coming and that precious metals would probably be the best asset to take you through that reset time. Your perspective on the viewer's question, is there really anything else that people should be looking toward right now for safety and less counterparty risk?
There's so much to agree with what Bill said. The counterparty aspect is incredibly important, and most things will have some form of counterparty. I think if you're not physically holding it, you don't own it. That old cliche of 9/10 of the law being possession is going to become really, really hard and true. People don't have stock certificates. They have IOUs from brokers and intermediaries for which rules and regs have been rewritten. It's absolutely exactly as Bill has said, and the maker of the great taking has said. We're reading the same footnotes, and I concur with that. So in actual fact, equities will not serve you unless you are issued the certificates. Plus, the one thing that many people ask is, it's what do you functionally do and how do you transact practically in a major disinflationary spell where often even gold and silver's official price, let's just leave that there for now, will dip because everybody will be panicking to make a rent check or to get purchase food. That's where having the cash that Bill mentioned will play a role, but it's more purely for a little bit of oil for the transition period. And I would use it to purchase further metals, actually, but you also may be in a situation where you'll have absolute necessities that you'll need. And even in that environment, people still need to eat. You've got to cover costs. You've got to be secure, et cetera, et cetera. So, ammunition for security and bullets, it gets very resetty, I know, but I wouldn't look that one in the face. If you've got gold, silver, and you can protect yourself, you're a long way to getting through a pretty sticky situation. the reference of the coordination that Bill also made reference to, and as again we share similar opinions on this, is isn't it convenient that everything's been synchronized potentially, and that this great collapse, and you were actually, I think it was Dunnigan was referring to how this always seems to happen. They mop up the small rats and mice, and the big corporate fascists pick up all the market share, the chosen ones that are designed to survive. And in an environment like that, mom and pop businesses will go. So, it's not even your business that will protect you. You need to it's like being taken back to sticks and stones and barbaric. You've got to protect yourself, protect your domain. Ideally, also, I think there's another trick that has the equivalent of the great taking in it, and that's the people are underestimating the likelihood of an interest rate spike driven by a major debt-based event. And that's a very convenient tool to add to the kind of tool that Bill and Dunnigan were referring to shake people out of their homes. We also know that there's entities that are doing a massive accumulation of assets, and you will own nothing, and a rentier society. This whole corporate fascism, which are actually proxies for statism, and then a kind of communism for the masses. You've got to avoid being shaken out of your assets. The problem sometimes is you can know something's going to go up and you hold on, but if you can't afford to hold on, you get flushed out at the bottom on things, and that goes for your home. If the mortgage payment can spike for a while, they can keep it up for long enough that you can't afford. Everybody gets repoed, and you end up with a rental agreement and BlackRock as your landlord. Don't underestimate that attack vector as well as those on your equities. So rather than answering the question, I've tried to, these are other areas which you're going to be potentially facing attack vectors in this situation, in such an event, as well as being very distracted by some geopolitical war, which will extend into maybe Lebanon or some other hotspot, etc., global hacks and all the other things that are mentioned. So the key thing is it's going to be shock and awe is the game on how only the war is no longer in Iraq. It's the statists versus the citizenry. So you have to have pre-prepared and have your plan. And the way you eliminate the interest rate spike risk, which is this new risk that I've now dragged into the room, is by having no debt. If you have no debt, you can't be shaken out on debt-based instruments. And I think particularly in the States, it's international, but it's very bad in the States. Too many people don't even know what they purchase things for. They just know payments. And there's an assumption of relative benignness in interest rates. If you think this was a steep increase in rates, watch a major debt collapse where in a space of a week, you lose 50% in the debt markets. Watch what that does to the rates. Again, I point you to the seesaw. The one can't go down, the valuation, without the rates going up. And everybody thinks central bankers set the rates. At the extreme moments, the market sets the rates. It doesn't matter what the central banker says. I will remind people, we've already had a microcosm of this in the collapse of the pound during the George Soros shorting adventure. That Bank of England raised rates twice in the same day. They didn't say, hey, we've had a rethink. They were forced. They were a forced hand. So people that think the economy is broken, they can't increase interest rates. It's not about you. It's not even about the Fed. The market will say, we don't trust debt anymore. And at that period, the super juice, the turbo juice, as I say, will actually be focused on gold. And that's when gold goes unavailable. And debt goes as much as you want for as cheap as you like. And that tipping point is the one where all the patience of the metal stackers gets rewarded in one event, but it isn't going to be pretty. It's not something to be looking forward to, because you're going to have a lot of neighbors and other people in deep stress and trauma. So that's why community, get people together and many other things. Anyway, I said a lot there, but that's my take on the cash question.
David, I was teeing that up for you as well, that you've been through a lot of debt cycles, and Francis is talking about an extreme debt cycle that we may be facing in the near future. But what have we learned from past ones that will prepare us for the future?
Well, I'm going to answer that, and I'm going to kind of go back to the previous question because I want to add something on the overall banking system. One thing during the Depression, a lot of people don't know, is a lot of the mortgages were callable loans. So Farmer X is making his payments just fine. Maybe he had a good year. Maybe he had 7 years worth of oats there or whatever. And the bank said, we're calling your loan. It says, what? Because you didn't read the fine print. You owe us In those days, what would it be? $7,000 or whatever. But there's no way the farmer's got 7,000. He's got 700, or whatever it is. So that was a lot. Another that was pointed out in the Great Taking is that a lot of banks just closed. It was only the favored banks that came back alive. So if you had your life savings in Bank X and it wasn't one of the favored ones, sayonara, you don't have money anymore, even though you might have had a good savings account. What I want to say on the banking side, down again, is that the world economy is contracting at a rapid pace, yet the mainstream press continues to put out their propaganda that everything will recover. The banking problems are so much on the increase that if you have over 250,000 in your account in the United States and many other jurisdictions, you are at risk of a bail-in. In fact, the FDIC, for all practical purposes, is broke, which means they really may not be able to cover the 250, even though they have to go to Congress and they're allowed, I think it's another 100 billion, which is a spit in the ocean, excuse the slang, relative to what could happen in a great insolvent position. It's unlikely, but there is a possibility of, and one of my main worries is a cyber event that the authorities really have no control over. Now, they also could do a false flag. I'm well aware of that. But yet the banking problems are many, they're varied, and there are multiple vectors that could come into the banking system at any time. And as Francis said, and I just want to add on to it, because most people think that the bankers are all powerful. They're the gods of this world, and they are not. The market has the ultimate say. And if the market says the only way to get you to hold on to that sucker ticket called the US dollar is to pay you more to hold it, then we're going to raise interest rates. And last thing, I'll just point out one of my biggest errors in my career early on. I admit it. But when Volcker came in and smashed the gold market and raised interest rates to roughly 20%, I actually thought it was the end, because I knew that was mafia loan money. That was the kind of stuff you got from this guy on the street if you had a gambling debt you couldn't pay. But yet the market survived. The reason it survived is we didn't have the debt to GDP ratio that we have now. We could never do that kind of interest rate again. It will crush the economy. And again, I'll play my Trump card. Excuse the analogy. I'm not a Trumper, but the idea of the Trump card is look out the window. Look at channel stuffing. Look at the grocery store. Look at goods and services. Oh, it's all going to Amazon. BS. Yeah, a lot of it has gone to Amazon. FedEx is in a decline. How much stuff is being shipped? Look at what FedEx and UPS are doing. Honestly, again, Mr. Gloom, I'll take it, but I think it's worth it. And I just want to do a public shout out to having this panel, because I love the steel on steel. Francis and Bill here, it always sharpens my thinking. It's always great to have a panel in my view. So thank you for providing this at the end of the year. It's been as worthwhile to me as hopefully the viewing audience.
And as we look into 2024, maybe we can get each of your final thoughts on kind of ways to prepare, because our channel is about awareness and preparedness. We've talked about investing in precious metals, holding real money, which I think for a lot of our viewers is kind of a no-brainer, right? But if we could get each of your perspectives on other ways that people can prepare for what is going to happen, or what kind of events are possible in 2024, starting with David.
Well, number one, as we said, you had the channel Reluctant Preppers. I don't know if you still do, but I love that. And, just keep it real basic. I mean, there's, a lot of people in the middle class never have a brokerage account. That's fine, especially if you can save, and savings maintains its value, which we all know it doesn't at the time. But you can save in precious metals. And if you do a long-term look at a dollar cost averaging program over the last 20 years, and you only saved in precious metals, you would be happy. If you just bought at the top, you might not be so happy. So I think food is number one, food that you really eat. I think living within your means to the best of your ability. I mean, I don't know what your locations are. I live in a pretty much middle class area. Spokane is not a real wealthy area. And, I think about the Netflix that I'm paying. I could go to the pawn shop and I can buy like 25 movies for $25, which is 1 month's fee to Netflix. I mean, I'd be a lot better off buying movies. So just little things like that. Yes, if you have any extra savings, some cash, it will work for a while, as both have outlined, but hard savings and precious metals. And when things go awry and they They may. I think they will, especially in some areas. It won't be equal across the board. Remember, when you hold something like this has value, and you get to set the value. The whole idea of a free market economy is when I do a deal with Francis and I pay him, 14 silver ounces for that used book that I want. He thinks he's getting a better deal because he gets 14 ounces of silver. And I think I'm getting a better deal because that book means more to me than 14 ounces of silver. So when you hold the real metal, you can actually set the price yourself. Can you do it walking into a dealer right now? No, that's not what I'm saying. What I'm saying is in a physical breakdown, in a barter situation, or even like a rental situation or whatever. You say, we're renting this place for $1,000, but if you pay me in silver, it'll be 900 in silver. I mean, there's a lot of people got to think. And when this thing goes further south, there'll be the greatest lesson in history. And that will be, if you don't own it, if you don't hold it, you've really lost out.
Francis, your final thoughts on preparation for 2024?
Self-reliance. So that means food, energy, water, organization. That means community and like-minded around you, because it's not just good to win yourself around a group of people that are losing. You get a target on your back. Security. It's got to be, unfortunately, Americans don't need convincing to get ammunition and guns. So I'll leave that one there. And silver and gold, which is retaining wealth. What's actually happening to just think everyone through, to just game theory the scenario. You've got I used to watch a Western called The Iron Horse. I'm giving my age away here in South Africa. And essentially you have a rickety old chuff-chuff train on old rails that's about to go over a cliff. And there's an archway that's going to a high-speed monorail, the new system. And their game is all your baggage and all your stuff goes down off the cliff on that train. And you've got to arch as much of that over to the monorail so that you don't get reset back down to zero. And gold and silver has to be physically held in your hands or where you know and control, not in institutions, not with counterparty risks, not with intermediation, not with hypothecation. Physically in your hands where you can get to it within a reasonable amount of time and no one else can. Has to be a fulcrum of that, and everybody should definitely take Dave Morgan's DCA idea up, even if they don't have lump sums. I'm aware a lot of people are distressed. $5, $20, there's no amount that's too little. And the final thought is work on your physicality and your mental strength, because part and parcel of this experience is going to be gaslighting, psyop event. And you have to be physically strong, healthy, and you have to be resolute and organized. And you need to have like-minded around you. So community as well. So those are a couple of keywords I'd drop on the preparation side.
Thank you for that, Francis. I was something that just resonated with what you just said was about you have to be help others around you to prosper as well, because if you're the only one prospering, you have a target on your back. That's a good point. It's about helping our family members, about helping our community to be resilient and to make it through these hard times, which is difficult because a lot of people are getting 95% of their information from sources that are trying to put them back to sleep and do psyops and misdirect them. Yeah, speaking of misdirecting, Bill, you said one of your greatest superpowers is detecting BS. Can you talk to us about how we can keep our heads clear going forward as the BS keeps getting thicker and thicker?
Yeah, as far as that's concerned, trust your gut, use common sense. Don't take anything for granted. And your common sense is way better than all the information you're going to get from mainstream, because all the information from mainstream, actually, let me backtrack a little bit. When you get information from the mainstream, it's bullshit. Right off the bat, they've actually made it pretty easy to vet things, because if you've got 4 or 5 different outlets saying the same thing, it's a plant, there's something wrong with it. And then you just got to figure out what's wrong with it. As far as prepping is concerned, Francis, that was fantastic. David, that was fantastic. I've done so many interviews where at the end I talk about what to do. What I did on my website is I created I have a very good friend that you could put out in the woods for 6 months at a time, and he would be fine. I just as a nickname, we call him Grizzly, and he writes at least once, sometimes twice a week, with actual ideas. It's called there's an icon at the top of my website called Grizzly's Corner, and he gives you ideas of what to do, how to do, where to buy certain products. And I mean, it's so far, I think we're about 2 or 3 months into it, and there's probably I don't know, a dozen articles that he's written, and he started with square one, water, power, things like that. So rather than spend time going through that, you can go to the website and be able to get hands-on ideas. Oh, it's simple. It's just billholter.com. Pretty easy. I do want to mention a couple things of what I think 2024 is going to look like. I believe it's going to be a disaster. I'm somewhat surprised that we've gotten out, or we're getting out of 2023 in one piece. I think it's very important to keep in mind the BRICS, as of January 1st, will be headed by Russia, thus Putin. I think the guy's a man of his word. He says that he wants fair and free settlement. You can follow what Russia's been doing, what China's been doing. They've been buying gold. They've talked about a gold-backed currency. I think the dollar will be torpedoed in 2024. We just had 6 additional nations join, 2 very important ones. One is Saudi Arabia. The other is the UAE. Saudi Arabia, a year and a half ago, came out and said, we will accept other currencies than just dollars. And just a few weeks back, the UAE came out and said, we will accept foreign currencies, but we will not accept dollars. That is a huge event. And Francis talking about interest rates spiking, I think he's absolutely spot on, because as it stands, or as it stood in the past, U.S. Treasuries, the U.S. Treasury, was considered a risk-free investment. And starting, like I said, January 1st, it's a new ballgame. There's a new sheriff in town. I do believe they're going to push the dollar over the edge, and there will be a risk adjustment, if you will, to the interest rates that the United States has to pay. Secondly, we've already had very shaky supply chains. COVID exposed all kinds of supply chain problems. What's going on now in the Suez Canal? What's going on now, or what will go on with the Strait of Hormuz? You're seeing shipping disrupted drastically. And at the same time, you look at reserves. Look at the strategic petroleum reserves. It's back down to 1984 levels or something like that. So from a supply chain standpoint, that's a problem. And then the elephant in the room, the U.S. has an election in November, a little less than a year from now. In my opinion, I think it's less than a 50-50 chance that the election actually goes off, because looking at the polling numbers, it looks like those who are in power would lose power if there were an election today. And as time goes on, I suspect that's even going to get more and more skewed. I could certainly see some type of a false flag to prevent an election. It could be anything. It could be a cyber attack. It could be, they could light a nuke off in a city and say, we're under attack. We can't have an election. Who knows? But I think those are the 3 big things. And obviously they all affect, other very important things. The credit markets, the exchange rates, et cetera, et cetera. So I think 2024 is going to be a year where we look back, our life will have changed to becoming unrecognizable, and where we are today is not ever going to come back.
Can I comment on the 2024 side as well? Because I didn't do that, and Bill triggered that. There's actually three things that occur on a 4-year cycle. So the election cycle is one that Bill has referred. I've also noticed historically, recently, a quantitative easing and then later followed by the tightening typically is occurring. And it seems to be there's an event that tends to come dovetailing with the election cycle. So the very tail end of one president, so he doesn't have to clean up, and then the other guy gets to say, well, it wasn't on my watch and now I've got his mess to clean up. It's quite a typical cycle. And there's a third one, that's the Bitcoin halvening cycle. And I think that was created by Status as an on-ramp for CBDCs personally. So I don't buy into this whole Satoshi Nakamoto narrative at all. But that's also coming this year. And it's often, its biggest growth has been associated with high proliferation cycles. So you've actually got a lot of events that you can call coincidence. I don't think there's that many coincidences that all happen to coincide with the 2024 alignments. Bitcoin runs last time 2020 into 21 hits its high, quantitative easing. So Bitcoin runs on dollar devaluation and proliferation, and it's been synchronized before, and its election cycle, which Bill prompted as well. So it's going to be tumultuous, and it's going to be important to be in the right things. But I just want to warn for those that are taking that as just a pure shout out to Bitcoin. Gold did very well from March 2020 lows, was much less volatile, and made its subsequent, I think it was 21 by the time it tapped out at 2K, and that was the last time we were above there. And gold is doing everything it should, as David said, and I think we'll get to the next 3K level. It has already broken that, and it will get jet fuel as well. And beware things that need grid, mobile network, and internet network. So while they may go higher, faster, they can also fall a lot faster. And if you want a balance sheet, you want stability, risk adjusted. In other words, volatility reduced. Gold should be at the core with that, as well as silver. So yeah, that's my 2024. A lot of potential. It's a multi-cyclical year now that seems to be synchronized as well on a number of levels.
Bill, I was a little surprised you didn't mention, but just to give you a shout out here, that what David was talking about and Francis have talked about a uncontrollable spike in interest rates that the authorities don't initiate, but the market does. You have talked about for years, and especially in recent quarters, about two resets, one man-made and one Mother Nature basically taking over. And it sounds like that's what they're describing there. It's out of the hands of regulators. It's in the hands of markets, and that can even be systemically threatening to the markets themselves. Go ahead.
Yeah, that's the second reset. The first reset, I think, will be man-made. The second reset will be the real reset, where officialdom, central banks, treasuries get overrun by markets, and we get free, fair, and honest clearing, pricing. And when I say pricing, I'm talking about pricing between currencies. I'm talking about interest rates, the differentials between safer countries versus highly leveraged countries. So yeah, I think this the second reset it's the Mother Nature reset. Mother Nature is going to take over, and God knows how high interest rates will have to go before currencies evaporate. And understand, when currencies evaporate and go to zero, the pricing in gold, in silver, in a cup of coffee, in a stick of gum, go to infinity in a currency that has blown up and is gone.
And just to tag on that, the collapse in the rates on the bond market coincided, just to show that these two things are yin and yang, to absolutely shore up Bill's point. That was the peak gold-silver ratio at 128. The minute that started to unwind, the gold silver ratios came down. And on that point, it's been in a range since May of around 77 to 88. It's very typical of a bear flag. So as a technician, I expect that to collapse as well. And it goes hand in hand with what Bill is saying. When the one dies, the other one spikes. So gold have to be, and silver holders have to be super patient, but then they get all their Christmases for the last 2 decades given to them in one moment. And it can be in literally weeks.
Unfortunately, it comes in the middle of a forest fire. Basically, we're all going to have a lot of collateral damage all around us, people that we care about, and it's going to be a difficult time. It's where we've got to work together. Got to be spiritually aligned, have good fortitude mentally, and as Bill, as you mentioned, even in the midst of that, and Francis, even in the midst of that tempest, there'll be lots of spin doctors trying to reinterpret and say this, don't look there, look over here, and that's not really what's happening. Here's the real culprit over there, and trying to misdirect people from being able to take effective action to take care of themselves. That's why we're here. That's why you're here. And I want to second everyone's gratitude. Bill, David, you expressed gratitude for everyone taking this time out to do this end of year wrap. I found it extremely enlightening. I think our viewers will as well. I thank each and every one of you for being here. Elijah pulled all of us together, did all the technical work. Elijah, thank you for that. So just really want to thank everyone for their contributions here, and our viewers, please spread this widely. Share it as widely as you can. Friends, family, coworkers, neighbors. We got to get the word out because they're not hearing this from official sources. So thank you for this independent voice, guys. Really appreciate you pulling this together.
And we'll put a link in the description of this video to all of your sites there. David, themorganreport.com, Francis, the Market Sniper, and Bill Holter, billholter.com. Find the links in the description of this video. David, did you want to give us just a quick wrap of what our viewers will find at the Morgan Report?
Well, just get on the landing page and get on the free email list. If you want to subscribe to any service, just hit the subscribe tab and read about it.
Francis, the Market Sniper?
I'll use the opportunity in a different way. I just want to give a short message to everyone watching this. All the people on the panel, and Elijah and Dunnigan, you're doing God's work. To the people listening to this, you are all junior leaders. Go and be those leaders and help. The most important thing is to keep your head when everyone else is losing it. Do everything, as I've already referred to retain mental fortitude during this period. If you take the right the preparational as we've underlined, and you keep your head while everyone else is losing it, you will be a shining light. And you were born during this era. And you have the wherewithal to be that leader. It's an obstacle course. It's a tough obstacle course. Many generations won't have had to run something like this. You're in this era because you can do it. And go and live. It's going to define you. Your environment and your era defines you. Go and be strong and be a shining light to everyone around you. Look, I have a community. It's on themarketsniper.com, but you don't need to engage with me unless you choose to. Go and be that person anyway and do that preparation. And then we have all won. Everybody here's time has been well spent. And thanks for having me on. And a Merry Christmas to everybody here, and to and a Happy New Year. So thank you. And we see you in 24.
Sounds good. Bill Holter, where can people find you? And did you have any last thoughts for our viewers?
Go to www.billholter.com. Just started it back in March or April this year. And it's really just an extension of what we were doing at JS Mindset. It's structured the same way. My advice is truly do the best you can to prepare. You're the only one who knows whether you're doing the best you can or not. And if you're doing the best you can, I promise you, there's no one on the planet that has thought of everything. So you will have forgotten something when this thing goes down. Don't beat yourself up. As long as you did the best you can, that's all you can do.
Thank you, everyone, for being here. Thank you, Elijah, for putting this all together. Folks, don't forget, if you don't want to miss a single interview with David or with Francis or with Bill or any of our guests, make sure you give us your email address. We don't share it with anyone else at libertyandfinance.com. Just put in your name, your email address, click submit. Make sure you confirm. On the confirming email, you'll get one email in your inbox per day with our latest interviews and any weekly specials. Always thank you, everyone, for being here. And guys, God bless you all. And everyone have a Merry Christmas and a Happy New Year. We'll see you next time.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for December 18th through December 25th, 2023, while supplies last. First, we feature 1 10th-ounce gold maples at just $30 over melt with a minimum order of 5. Next, we have Silver Eagles at $4.99 over spot, making this a great time to swap silver bars into Silver Eagles at the lowest premium in years. Finally, Constitutional 90% silver is just $3 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.